to get or fix your credit. Obviously, to get a car loan, you need some credit. That's what helps exponentially and helps you get better approvals for loans and things like that. First thing you need is a job. Obviously, jobs, depending on what you do, you need more income, things like that. Starting off small, you usually get a job that's local, close to your area, so that way you can have income in order to cover credit. You need income in order to get a proof of credit. They usually look at your bank history, see money coming in, money going out, bills being paid, things like that. Now, at that point in time, what is credit? Borrow money or borrow something now, pay later. Either pay off the whole lump sum later or pay it off bit by bit. Now that's where people get caught up, because getting a car loan as opposed to paying off your credit card bill, there's different rates. So a credit card is way higher than a car loan usually, long term. So if you're paying off your credit card bill over 5 years, that's not something good. Your credit card bill should be short term goals of paying it off. Car loans are obviously a set amount of time that you've planned ahead of time. And the reason why you do a car loan is so that you didn't waste money up front in order to have the car, and then a year later the car be gone and now you have to go through the whole process again and have that money lost. You only spent a little bit in order to have the car loan. Now, utilization, after you have credit and they see how you're using it, if you're not paying it off and you're paying later, that's a high utilization, and end up utilizing it a lot more than what you should. You got to utilize it at 10%. So I use percent wise because rough numbers, if you had 10,000 in your credit limit, you use 1,000 for your bills and you should pay it off, keep it paying it off. Use 1,000, pay off 1,000, use 1,000, pay off 1,000, and that'll help build your credit very well. At that point in time, when you have higher credit and you think, oh, my credit's lower, and then you make a big payment on your bill, yes, it brings your utilization down, it helps your credit score, but it doesn't show the banks that you're good with money at this point in time. So what you have to do is big moves. So say you have a ton of credit utilization and you do want a car, and instead of taking on this opportunity of, dang, my utilization is going to give me bad credit, I'm going to have a bad car loan too, personal loan. Personal loans are in between what a credit card bill's interest rate would be and what a car loan for someone with good credit would be. So car loans are low single digits. Personal loans are usually between what a credit card company is and what a car loan is. So 10 to the 20 and 30%, depending on how bad your situation is. Credit card percentages can get to like 26%, I think, which is crazy. So at that point in time, instead of stressing the two situations, break it down to one. I need a car loan and I have X amount of money on my credit card bill. My car that I want to pay for, you do the math, you take whatever you want to pay a month and times that by 60 or 72, the amount of times you want to have that loan for. Usually you'd be surprised what your budget is. You're going to have to increase your monthly payment. And what that does is taking your credit card bill and eliminating it with the personal loan for not only your credit card bill, but the car loan at that point in time. You put those payments into one. Now you're paying off your problem. You freed up your credit utilization at that point in time, increasing your credit, which helps you go get the car loan with the money that you have in the personal loan. So the personal loan, you got approved for it to lower your credit card bill and get approved for a car. Now you have that money in the bank, you let it sit there. You go get approved for car loan with better credit, and now you use that money to pay off the car loan, and you have the money there. God forbid you can't make your monthly personal loan payment. So it's basically the two lump sums in one, because your personal loan comes from that same amount, and then your car payment does too. So you could go through the process of buying outright the vehicle you want from the amount from your personal loan, but why take on that risk again? I have other videos for that. So those are just big moves that you can make in order to alleviate or fix your credit. Now, how to get credit is getting a job, income to cover credit, start using some money, have your approval for your credit card, and then start to utilize it properly. You want to utilize it in the 10% range. If you only got $1,000 credit limit because you're young, you unfortunately got to use that $100. They want to make sure you're good. And then as you gain more traction and get better credit, you can get approved for more credit cards. Now, what people do is they lose track of how many cards they have, but what getting more cards does is it increases your credit amount quickly. So that way, if you want to just cover your monthly expenses of $300 on your credit card and then pay it off each month, you would get your first credit card and only use it for maybe your gas at first, and then increase your credit limit by either utilizing the card properly and the bank will give you a loan. Right now, the situation in the world's a little different for getting credit loans, or you get approved for another credit card in order to increase your loan. You don't have to use that card as much, but what it'll do is make the banks that see both accounts open, how much credit access you have, how well you use it. So now you make a big move to get a car loan because that's going to establish your credit. You've used credit cards properly, but if this is a first-time car loan, you're now going to be in the situation of fighting interest, getting the best interest rate, which you can always get a rate that's satisfactory, pay it off for a year, and negotiate a loan with a different bank to pay off less. That's how you get or fix credit in order to get a car loan, or to fix a situation you're in order to make things a little easier. Paying off a monthly bill that's a personal loan is usually going to save you way more long-term because it's just the interests on the credit that you were paying for at that time. Now it also alleviates your credit line so that you can actually use it for what you need to at that time. Hope this video helps. You can always find more information at deansomecars.com, and you can come see me, Dean, Sunrise Center North. Enjoy the day.